In the month of February, we're much like January, a lot of volatility, but stayed fairly flat on the year. So your year-to-date returns for our major indices are right there. A lot of news within this month. Again, a lot of up, a lot of down. But the main things that stick out within February is that our Mag 7 continued to fall off, but the index, meaning the S&P 500, or the one I mean is the S&P 500, is staying strong. So what does this primarily mean? Well, I think the answer is if we take a look over at the Russell 2000. The Russell 2000 helps us gauge small cap companies. For many, many years, small cap has underperformed other parts of the market, both US and global. But as you can see, this year it is going pretty strong. So this could be a bit of a reversion to the mean. Okay, again, it's been lagging where it should be, on an average annual basis. So it's been lagging over the last 5, some could even say 10 years. But this year, it's doing much better. Okay, again, you have our major companies that have led the gain. If you remember, I believe it was back in 2024, maybe 2023, but there's only a handful of companies that drove the overall market return. Now remember, we're coming off of 3 years of double-digit plus growth, right? A couple of 20%ers and then some high teens, okay? So there's been a lot of growth in a few amount of companies, and now, at least what we've experienced so far this year, it's kind of the other way around. So the S&P 493, meaning the 7 companies that are not in that Mag 7, are doing just fine, or better on the whole. So you have that, and then you do have turmoil, globally, primarily from the Supreme Court decision around the tariffs, which again causes a flux because we just don't know what's going to happen next. But you also have, because of some of the decisions that we as a country are making. Now we bombed Iran again. Some of what we've done within Latin America. Money is moving away from the US dollar. That's why we see such a run-up in Japan, which would be the Nikkei, or even in some Europe currency. Now, this firm believes that is a short-term move. Our global indices look better than the S&P 500 right now, and so the big question for most, and this firm as well, is that what the rest of this year looks like, or is that going to be a small pocket? And two options are: is that going to reverse back? We're going to go back into some of those larger companies. Money's going to come back more into the U.S., or are we due for that recession? So the interesting part of all of this is that the earnings reports, the reports coming out of companies still look strong. Now that makes sense because we have to remember the stock market precedes these earning reports, precedes what's going to happen economically, because it is future thinking. Okay, when you purchase a stock, it's not because you think it's worth that today. It's because you think it's going to be worth more tomorrow, in the future, so on and so forth. You think it's going to be a company that's going to continue to grow. So the market is always ahead. And that's what we need to be cautious right now. We're going to see good earnings report. That makes sense in the here and now. When we look in about 6 months, that's when some of the earnings reports will have to pay more attention to what was happening right here and now. But as far as what our firm feels like, we want to be ready for our correction, which again is a drop of 10% from the year high. We want to be ready for that. That happens on average every year. I want to be ready for that just mentally. So we don't believe that there's any necessary adjustments right now, but we want to be ready for that mentally, because that may scare some people. Because again, it's going to be interesting to see, especially within the Mag 7. Okay, so they've already lost, but what happens when the S&P 500 does go down? Have they lost most, and are they going to recycle up? Are they going to lose more? Are they going to lose less compared to the overall S&P 500? That answer is still to be seen. That's the things to keep in mind. It's hard to call this year. That being said, we are still looking forward to a large tax influx from the big beautiful bill from last year, that hitting March, April, and people spending money. And there's still some other stimulus that are going through. The tariff issue, we believe that the Trump administration is determined to find another way to do so. So, there's been a lot of lawsuits that have gone and trying to bring back money from tariffs. We don't believe that's going to happen. If it does, it's going to be a long, drawn-out legal process. But we think that one's one to put aside. We do still have global chaos from some of the decisions that we're making from just some of the things that are going on. But again, that's kind of always in the mix, and that shoe may drop at any point. Anyways, thank you guys so much for watching. I hope that this blesses you, and I look forward to seeing you in March.